This is the macro show. This is pregame, okay? We're trying to play the game that's in front of us today. You know, leadership matters at Hedgeye. So again, being transparent, accountable, and trustworthy people. This is a game about playing and weighing probabilities. It's not about picking stocks. It's about picking the right portfolio.
Keith, risk ranges are going down with volatility in or approaching the F bucket, but we have rising IVOL premiums as we approach the bottom end of the risk range. So do we hold, cover, or press? Your thoughts, much appreciated. So I guess the question is really about, those two countervailing things. To your point, you don't like to do much, if anything, on the long side when volatility is increasing. But the flip side is we have rising implied volatility premiums, and we're near the bottom end of the risk range. So I guess your kind of thoughts on those.
Yeah, well, the playbook would say when you're at the top, when a price is at the low end of the range and implied vol is screaming higher, that's when you cover some, right? Now, the risk is if you cover all, so don't do that. One, cover some is written in all caps for that reason. Keep your core position, keep your minimums, have rules, like, again, and then, because you don't know when the market, the stock market could be down over 3% today. The risk range could move, right? We currently have it down 2.6% today at the low end of the range. But the whole point about a market that's crashing is that, again, they crash from oversold levels, or what is defined as the low end of the range. So that's why it's, I have no longs in real-time alerts. I only have shorts. And it's really up to you, like in terms of how much risk you want to put on. Intraday, I was just looking at it, Jonesy. I've traded, so far this week, I have 71 trades in my PA, in my long short book, right? So, and what that means is that I'll trade intraday. Like, there are a lot of intraday moves. So think about what your exposure, like for this morning's open, I'm 6.1% net short, right? Now, yesterday at one point I was 7.8 or something like that. But we also intraday, the S&P at one point was down 2%. So, then I'll cover some, right? So if you're an active trader, I'm a full cycle investor who incidentally actively trades. So, some people, try to talk down to me saying, oh, he's just a trader. Well, I like talk right back at them. Like, oh, you're just an idiot. Like, we're the longest of long-term investors, and we also know how to manage the immediate term risk. That's called trading. So, in these OODA loops, Jonesy, the answer is not easy. Like, if you want it to be an easy one, it's not going to be one. The answer has to be your answer. So you, Jonesy, or you, Mike, or you, Catherine, you're sitting there, Catherine, saying, okay, I know what my rules are. I know how actively I want to trade this or not, right? If you don't want to trade it, like I've said multiple times, just go to cash.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.